Welcome back to the channel. Here's Trader Jan speaking. We have the 30th of March 2026 now, and we are in the earlier session of Europe. It's Chicago time at 2 o'clock in the morning. Market opened at 2, and we see the market is trending down a little. So looking at the current situation, my best guess at the moment is I'm gonna wait until the market goes here. The market is in price action wise in an uptrend. So I'm kind of waiting until the market hits that level, which was heavily traded last time. Maybe even going a little bit below that one here, having a fake out and then going back up again. In principle, looking at the overall markets, it is like I just can see here the 15 minutes chart. On Friday it was a heavy sell-off, and then the markets in the Asia time got back up. There is a big volume here, up here. It might be that the market will test that. We have that market, that area marked here. So going to be very careful once the market hits that area. If it's going at the same level as the overall trend, which is clearly short, but I'm today willing to take any kind of trades, short-term, long, and short. There's one event happening today, which is Mr. Powell speaking, and other than that, there's this week is non-farm NFP week, non-farm payroll, and that's on Friday. Usually those weeks are not very active during the beginning of the week, but we never know nowadays. So we take opportunities as they come. When the market goes down here and the buy orders are coming in, then I'll try long entry. Sticking to the rules today, and yeah, let's see how it goes. And the market pushed up here again. One of those moments where you think, oh, I should have gone in. But it didn't fit to my I trade idea, so I really wait until the market hits that level. There was such a high volume area at this one here, at this one, this candle here, that was printed like a huge volume. And if you look at the backgrounds, take that indicator away. There's one indicator which I have here, which is called my market footprint indicator. That one marks the value area of huge candles, of huge volumes. And this blue area here is the value area. So if that one here doesn't push through the value area and settles up there, I would still consider market being going short here. And this one here should be the level where we should be careful about. So let's mark that one here. Actually, we have it here as well. Don't need to mark it separately. I've got it with the market map, and looking at the volume traded, yeah, that one matches very well with the volumes traded here. And often the market, like look at this one here, the market went up and then went down and kind of like, and then to touch that volume again here, and then here the market went up again. There was big volume traded here, market went back, And now the market here, it went up, touched this one a little bit, but this one is still like free floating volume, and it was mainly on the let me check if okay, yeah, that was quite a mixed area. So this one here, out of those, a lot of buyers here. There might be a lot which are trapped right now somewhere below here, and logically those people which are buying up here, they're gonna have this sell stop somewhere here. So look at this one. That candle did not move higher, so I'm inclined to take
Order
a short
filled.
now. My stop loss is somewhere here. Just a short trade, nothing crazy. And I'm gonna set my take profit actually very close. It's a ridiculous
Order cancelled.
ridiculous 0.5 risk and reward ratio, just 50 ticks, but it seems to me obvious that the market wants to push down here. And my stop loss is somewhere above. I keep it with 100 ticks, even though the value area here is, yeah, is not, I could put it at the top here, but I stick with my little rule. So we see here the market sell orders are popping in and they're increasing and increasing, they're pushing down. The absorption is going on here too. So currently right here, there's a lot of absorption of the fights going on. So let's see if the market sell orders are coming in. The market buy orders coming in here, and the limit sell orders are kind of feeding the fuel into that. So let's see what happens. Not a lot of volume here traded and such a big spike. It comes back to that level where that candle broke back. Everybody sees the same information as I have, so it might be as well that people think, okay, they're gonna go short here, so let's get them. The market sell orders are coming in again right here. See that high volume area here. That's seem to have taken care of that little spike. Yep. But here market buy orders popping in again, and the absorption is going on too. Let's see here, there's little spike. Let's see if volume is actually being accumulated up here. That means interest in trading
Stop
is
filled.
increasing and my stop is filled. So first trade of the day, which happens to be a loss of 100 ticks and early time. So looking at that one here, do I risk a second entry from up here? It looks tempting, but the market sell orders are not really, the sellers are not really coming in here. Even though I see here that candle is a big B candle, was this enough resistance to push the market down here? Looks like those guys here, they are holding. And here limit sell orders above the current price. They're getting stronger and stronger, getting more and more. And you see it here at the DOM as well. That one is more, you see it here on that bar. That represents the limit sell orders above the current price. There's a mathematical model behind how many of these levels are taken into account. I wanted to create that indicator here, the liquidity battle indicator, in a way it can be used for every market. So it's not a fixed amount of levels here. There is a mathematical model behind that, and it is based on deviations. I think level 2 deviation is here. So the market went down here. So maybe my original idea is not too bad, but I will not try to get another entry. The market buy orders here are not strong enough for long. They're being absorbed. So I still believe in this original idea to go back here to that level. If the market goes back to that level, then I'm in for a long, but not another short trial. If you look at the price action here, it is a long. And if you look at the evidence that how often the markets came back to a high volume area, here eating up that one, here coming down to that one, and now the market came here back to this one, back up again, and now I want to see the push down to this volume. I'm a strong believer in volume. Market goes from volume to volume. People want to trade. The big traders, they just want to see, they just want to have enough liquidity to place their orders, to place their huge orders, and those are the zones here where they can actually trade. They are not able to trade like in those low volume areas here, so always try to be in that area or go to the next one, or then push the market down so they can buy cheap here again, and then the market pushes up again, push it down, they can buy cheap again until the market reacts and pushes the market back. But those ones which buy here, they are out here already. So the market does its stuff. And me as an institutional trader, I would like to push the market now down here. Maybe I'm going to push my market sell orders in different waves until the market reacts and does the rest of the sprint for me. Here I would enter the market and then I would go up. That's not big of a push here for institutional traders. I would wait until like hundreds, even in the European session, like 100 contracts at least. You see the different behavior of the liquidity battle now. I press this little button. This one is showing the real order-based impact. If I put this one, this is a smoothened way. So like the market buy orders here, they're smoothing up and down. If I do this one here, then it's much more spontaneous because the orders are popping in, and at the moment they are popping in, they are shown here, but it's difficult for the eye sometimes to really read. And you see the market here is having fun on that area, doesn't really know, do I go up or down? I see here the limit buy orders at below that price, they kind of say, hey, buy me, buy me. So I'm gonna switch off for the moment and see you next time when the next trade arrives. So coming back to the market now at 3:17 Chicago time, the market seemed to have decided to go bullish. So waiting for the retracel to this high volume area was not extremely successful. And checking in again about the trade here where I entered into short. The thing which really bothers me now by thinking about it is that I was telling before that, okay, the market wants to push back to those volume areas here. But the assumption I did was, okay, he will pull back to that area, not just to this one. But the market did exactly what it did the day in the Asia time before. It pushed back to that level, moved up, pushed back to level, then and then pushed back, pushed up again. So I'm not sure if we will see the touch of this high volume area again, but since the market is in a kind of in a move price action wise bullish, I would suspect that the market goes north a little bit more, but I want to wait for another retracel, maybe even touching this high volume area here from that huge candle. That's the blue thing here is the value area. So let's see if the market comes back and pushes up through. We see high volume up here, and let's see if it would affect us in any way. Not yet. So the high volume is, so this compared to the other volumes traded throughout the day in the Asia time, this one is not extremely a lot. The main volume has been traded up until 9 o'clock, let's say between 7 o'clock and 9 o'clock Chicago time, and then the market went north. So there is, and price action wise, it's like higher highs, higher lows. Here we see in this area we see more volume, so I would expect the market to go back here, even going back to this one here and then going up again. So let's see, I want to buy the markets in to a good price, not at an expensive area. So I rather, first of all, I'm going to change my indicator here. I rather go into a long than a short because price action wise it is a long market. So I'm gonna wait until somewhere here or somewhere here that my stop loss of 100 ticks is somewhere below that one. Okay, that's about it. And here in this area here, as we see from the 15 minutes chart, that area is a quite critical one. That's where a high volume from yesterday starts. We are currently filling up this low volume area from yesterday, and where we should see some resistance. Okay, then we're gonna monitor the market and let's see what happens. Welcome back to the channel. So we have quite bearish trend. I added the S&P 500 here on the left side, and as it looks like we go deep south. So the initial range of the Nasdaq looks like it had been about 1,000 ticks going down. One of these cases where you might think, okay, now it needs to go up, right? But there's never any guarantee that the market will return. I'll wait until either the buyers or the sellers are making an entry. And here the buyers seem to
order filled,
want to move it up. Buyers entered the market here quite heavily. Might have been a first boost. Or the sellers just want to take it more down. There's nice volume here at around 255. There is volume being pushed up further north. As we can see here, markets dynamics changed a little, even though demand index here was has a divergence with the price. Price goes up, but demand index goes further down. That usually means that with the move up, there's not a lot of volume coming up, which we can see here. But what made me enter the trade here was these big volume spikes here to where the move up came with big volume and got confirmed with this big volume here in that candle. The S&P 500 seemed to move up too, has a certain upward pressure, not necessarily supported by a lot of market buying here. But as you see in the candle here, there's not a lot of interest at the ends. Let's switch on the smoothing here a little bit. So the major volume here is more in that area here. So looking at the S&P 500s, he might go further until that level here, until this low volume level. It's currently on a high volume node here, having probably this part here, but the buyers are in. And on the Nasdaq side, we are in a zone of high volume. So I placed my take profit here. It's a 200 ticks take profit. My classic amount, I still have 100 ticks stop loss. Price action here changed a little, and we have a kind of a lower volume area here, which maybe the market want to trade through, maybe not. Who knows? Let's see if the S&P 500 gets stuck here and get pushed back here. This one is a 5 minutes chart. The S&P 500 wants to go further down as the Nasdaq as well. So
stop filled,
yeah, that trade is closed. My stop loss was hit. Another minus 100 ticks. 200, minus 200 ticks for the day so far. Always not so nice to see that this one is at the end of the move. Should I have taken more stop loss, more stop loss here, like 50 more ticks? Maybe. But that's the game, right? You never know where the market goes to. The market might go even further down. So the sellers are popping in here. I'm gonna see what's happening here. Is the market moving down with pressure? Move down here with pressure, definitely. And the pressure is still on. So let's see what happens if the market comes back here into this area where we had lots of volume traded here, and then the market returned. Let's see what happens when the market comes back there. It seems to push up there. Not massive amount of volume involved. So if the market returns here and the sellers keep staying in, then I'm gonna
Order filled.
sell on that side here. Market goes until the end of this high volume trading here. The sellers are still dominating. The S&P 500 is now at this high volume node here, probably trying again to pass that one. I'm in with a sell order, but it doesn't look like the market wants to go down even further, even though it's pushing down now. Oh yeah, with a lot of markets orders, but I'm kind of not extremely convinced that this will hold. It is this high volume area where the market wants to trade in or go out, or once the S&P 500 passes that area here, then it's a time for me to go out of the trade. So the market buyers come in here, usually a sign of continuation. So the buyers are pushing.
Order filled. Order filled.
So I went out of that trade, out of the sell trade, with minus, I don't know how many ticks, because the market was pulling over that area on the S&P 500, now reaching that area here, which is a resistance area, but the market might touch it. It's a low volume area here. So the S&P 500 pushes up and the NASDAQ pushes up as well. Wouldn't be the first trade of the day where I am in plus in the midterm, and then the market goes back and then hits my stop loss, and that would be the third time of the day. So here my stop loss is right below that high volume area where the market before. Which we got a lot of work done here. Now it's testing that area back again with lots of volume. And the volume is down here and up here. So I'm pretty hopeful that this was a test of that area. And the market wants to push up even more. Looking at the pressure of the market buyers, it's pretty okay. It's good. The sellers are coming in now. The limit sell orders are active here too. I hope it's not going to be one of these situations where you have a change of market structure. Let's see what the market does when it comes up here. Market is building up volume. If you see here, that's volume, and here volume, and here volume. So the market is building up. It's coming up now to the high volume area of this one here. So as long as the market is building volume, taking volume upstairs, carrying that weight, then I'm okay. Limit orders are here. If you see, don't need to even look to that's liquidity battle indicator here. You see here limit sell orders. They are saying, hey, come here, I want to sell up here. I have liquidity, and the market does the favor and goes further up there. We are now at 70 ticks and plus. So even if the market goes back to that area here where we had a high volume, it might still be rejected over here. Building up volume here. This one is an area which we marked as, yeah, it is a nice resistance area here. But the market went straight through here. Usually what happens after the opening in the US market, it's erases the moves from the previous either European market or the Asian session. I just hope that the market gonna go through that initial range and gonna test the upper part of the initial range. Let me check here where that have been. The US market opened here, it got up here, and there is a certain likelihood that here was 831. So you could argue now is the initial range this one here, or is the initial range that one? Initial range of 886 ticks is a bit big. This one here is 200 ticks, not too big either. What does the S&P 500 do? It's pushing up here. Oh, yep, there was a big push coming in, but that one got easily eaten up by the market. If I get my 200 ticks plus, then I would be in the at least black zero for the day. I had 2 times minus. So the market goes further down, further south now. What's happening here? So it might be that the market wants to go back to that area. So the market took volume up here, took volume here, took volume up here, and then in this area of not much trading interest on the way down, it gets rejected. So let's see if the market wants to take more fuel down here. Okay, looks like so. So I left my stop loss down here, and now with not so much volume, the market goes up again. If it can't pass this volume area here, I'm inclined to
Order cancelled.
go out
Stop filled.
break even. And yeah, as you can see, not the wisest decision of my life as it looks. So the market is bringing more volume up here. But there's not much market buy orders, mainly driven by market sell orders and absorption. So the market goes south. We are around the POC at S&P 500. Kind of hesitate to trade there.
Order filled.
I'll go in a short here because the market sell orders, they're keeping up pushing down here, and volume is keeping being pushed down here as well. So to me, to my unexperienced eyes, it looks more like the market wants to go south, but it is around the POC in the S&P 500. It is a 50-50 thing. On the S&P 500, it's the market sellers are in the game as well. So I'm currently looking at the delta here. There is a likelihood that the market wants to push further south here because there are buyers, potential trap buyers. Market is trading around the POC and the S&P 500. Not a good idea. trade in that area. Just accumulating volume. But small stop loss of 100 ticks in the Nasdaq, which I have, you are easily being stopped out. Now sellers are kicking in again. Let's see how much energy they need to push it further down. There are some buyers here and buyers here. If I would be institutional trader now, I would push it even further down to get the stop loss orders down here, down here, down here. Does the market carry volume? Okay, here that carries volume down. But have you seen here the volume getting up here? So it is volume on both sides.
Stop filled.
Yeah,
Stop filled.
that was it for that trade. My stop loss got filled. That was too easy for the markets here to go back up. What's up here? Look at that, and not a lot of volume involved. So it's more like a range here. Maybe range trading techniques help a little. But for the moment I'm gonna make a break. Too many trades which were not successful. So I had 4 trades, 3 trades went into stop loss and 1 trade break even. So overall minus 200 ticks. It doesn't seem to be my day. I might come back later and check out if there's another trade opportunity. I have maximum 4 losing trades per day. So if there's one more losing trade, my trade is over, my day is over. But at the moment, I favor a little break. Big learning here: don't trade when the S&P 500 is around the POC. That's been mainly the case here. I had 2 trades where I actually have been in profit for a while, but I didn't take the profit. So maybe I should be less greedy. That's one option. So another opportunity here. This one is more range trading opportunity. But I'm gonna wait until the price goes further out here. Because this is a range, 160 ticks, a lot of volume being printed here. And I'm gonna wait until the market goes out. Okay, so touched the ground here already. And I'm not sure if there's some buyers trying to get in. But the delta is still negative. So it's now outside the range. A lot of sellers coming in. those are just the stop losses. And now let's see what's happening here.
Order filled.
So that looks like the market wants to go back into the area. I know I have my demo account on here, that doesn't matter. The other 4 trades before those were in my evaluation account.
Order placed.
Those were on my evaluation account. I didn't have take profit and stop loss set for my demo account. I was testing the module from ATAS on Mac for copying of trades to another account, the following manager. And my demo account was connected to my evaluation account. That's why before you heard order closed or trade closed multiple times, because it was from the evaluation account and from the demo account. Yeah, one of those cases where
Order cancelled.
yeah, maybe I should have done it with my evaluation account, because I'm now here 48 ticks in plus. And I've set up that account for it to go break even after 85 ticks. So my strategy here was to trade inside the range, which means my take profit should be
Order cancelled.
range. You can go out with range trading in the middle of the range, which is the safest way to do. I put it at the end of the range. So either I'm gonna get taken out with 5 ticks by my stop loss, or with 123 ticks at my take profit. And since this is a demo account, I'm kind of naturally, I don't know, subconsciously, I don't know, it's working differently. And it would work even more differently if I would have my own money on the line.
Stop filled.
So that's break even was filled. 5 ticks plus demo account, range trading. So the market went inside the range and then came back at my entry point. Now it's at the entry point again. At the board of the range, but it's not really dominance of buyers or sellers. Buyers popping in now.
Order filled. Order placed.
Go back in the trade, and I'll do my stop loss or my take profit.
Order cancelled.
Range. What is this black hole here? Yeah, the market is pushing down towards the range, and where behind that one my stop loss is laying. And the market sellers are taking
Stop filled. Order placed.
That was from my demo account.
Order cancelled.
I should have not set these stop loss and take profit from my demo accounts. But on my evaluation account, I now got stopped out. That was actually my fourth trade which was stopped out. Again here with that one as well, I entered in the middle of the range here. A place definitely where you should not be entering a trade in the range. It should enter the trade at the edges of the range and not in the middle. Yeah, stupid me. And surely enough, those stupid mistakes gets but as you can see, the market goes even further down, and now here you see that the market seems to try to push away from the POC in the S&P 500, and here went further down and touched the range and probably might go even further south, but you never know. This is the low of the American session, and looking at it from a 15 minutes chart, yeah, it looks more like down trend. But I'm at the end of my trading budget for today. I had actually I made a mistake, and ATAS on Mac OS doesn't yet have the functions implemented to read the trade statistics from the library now, or from the internal databases. But I've got my budget indicator here that is saving all the that's the account statistics indicator here. A little deep dive into that one. What it does is, if we go into the, where is it? That you can just move it around here. Here, account statistics. If you go into the settings, it allows you to do a lot of things like the amount of days you want to have the statistic over, and then filtering on several instruments and all those different columns. But one of the things I implemented was that it's auto-exporting and after every trade. So once a trade is closed, it's automatically exporting to an Excel file or a CSV file which you can specify. So I have saved them, and here I see I got actually 5 trades and all 5 trades in the negative. There are 6 trades. One is with break even, and one is with minus 85 ticks. The other 4 are minus 100 ticks. So I'm over my budget. No, not allowed to trade anymore today. And it is the result of the day is minus 484 ticks. Not an extremely good result, but as a learning, I stick to my stop loss. Didn't move the stop loss. That's already good. I try to look at the what markets players are doing. Trading within the range, not good. Trading when the Nasdaq, when the S&P 500 is around this high volume area here, and I said that already in the markets analysis that the this Monday might be well a range market, so it's not surprising that during the American times these here are stuck. And isn't that like 9:40 now, Chicago time, 9:30? That's Mr. Powell was speaking. It looks like it didn't spoil too many news so far. So my trading day is over. Thanks for listening for those who wanted to listen to this stuff here. And I'm gonna call it a day. Enjoy. Next video gonna be up tomorrow morning, and that's gonna be the market analysis preparation for the next trading day on Tuesday. And for sure, this video here gonna come online. And yeah, just a review of the locations. That's gonna be one of the next videos as well. Did the locations actually do what they were supposed to do? If you look here at the 15 minutes chart and look at the locations which I've done in the last market analysis, that's actually pretty looking not too bad. Not too bad. I'm just not disciplined enough to work with those locations, I guess. If you look at these ones here, these two, market was down here and had like an upshift here. I just could have done, that's minus 170 ticks, trading until the next location, which was 192 ticks. But I just realized now by talking about it, I'm not really taking those locations into account. I think that's something which I need to be working on. Okay, learning of the day. Then happy Monday and see you on the trading floor.